We said, why don't we have a single Indian homegrown QSR? So it started with that. Today we do 10,000 kilos of fresh dum biryani throughout the country on a daily basis.
सब मिला के कितने brands हैं?
सब मिला के हमारे अभी आज के डेट में about 12 plus brands.
12 plus brands and 400-500 SKUs.
Yeah, 400-500 SKUs. Then you also have these partner brands, so which would be another 15-20 of those. So if I put all of them together, we will be having a bouquet of about 35-40 plus brands. My firm belief is that the brand strength is directly proportional to the fragmentation of your distribution.
How many cloud kitchens are there in your estimate? Like, are we talking hundreds, thousands, or much more?
Thousands and much more. Yeah. So typically on a Monday to Thursday, we all go and hit a restaurant saying that a happy hour chal raha hai. That is the unhappiest hour for the restaurant owner.
Here we are in Bandra, where I think if you throw a stone, you'll either hit a salon, gym, or a cafe. Hey there, and welcome to Paisa Vaisa. I'm Anupam Gupta. Want to get smart with your money? We bring in top experts to show you where to invest, what financial trends to follow, and how to build lasting wealth. Ready to get smarter with your money? Hit that subscribe button for Paisa Vaisa and check out our episodes. Folks, welcome to Paisa Vaisa. I'm your host Anupam Gupta, and on today's episode in our sub-series on how businesses work, I've got one of the most exciting, check this out, okay? Internet restaurant platform, probably the world's biggest. My guest, one of the earliest pioneers, Sagar Kochhar, co-founder of Rebel Foods, the company behind brands such as Faasos, Behrouz Biryani, Ovenstory, and much more. Sagar, welcome to Paisa Vaisa. Thank you so much for doing this for our audience.
Thank you so much, Anupam. It's been a pleasure, and thanks a lot for giving us this opportunity to talk your viewers through our journey of Rebel Foods, because there's a lot more just by what went behind the scenes. While as a consumer you look at the food brands and the products, which obviously are the core of our existence, but I mean it'll be good to share what we went through to make that happen.
I have two angles out here. One is that I used to get Faasos on Twitter back in the day in 2011. I had no idea you guys started in 2011. Had a seriously long back. Cloud, I have no idea how cloud kitchens work. Okay, as someone who goes out to restaurants, I don't understand how restaurants work. But I want our audience to understand how this business works. Okay, so let's get into it. I mean, you guys were early.
Right.
Here we are in 2025. Look back at 2011. Let's go. Let's start.
Sure. So Anupam, when we started our journey, it started with this very simple aspiration that we had to say that you have so many QSRs coming up in India. You have the burger chain, you have the pizza chain, and all of them were international in nature. We said, why don't we have a single Indian homegrown QSR? So it started with that, and that is a vision that we want to build the largest Indian homegrown QSR chain in a category which was a lot more Indianized, desi, like wraps and meals. I don't know how many of your viewers and you, for that matter, would know what is the full form of Faasos.
There is a full form.
There is a full form of Faasos, and it interestingly stands for fanatic activism against substandard Occidental shit. Right? So we were always kind of rebels with a cause, and that is how when we started, that was the vision, right? And 2012-11 we raised with Sikwa about 5 million, and then we started the journey in 2012. We started expanding. For soon to realize in like a couple of years, we realized the few of these harsh truth about the industry, right? So actually, as a consumer or for someone starting a business, food seems to be very glamorous. Right, the fact that there are no entry barriers there, you could, everyone believes that they are foodies. Exactly. They have had some great food across the country. They also coincidentally go on all those weekends and look at the restaurants, rush to say that, yaar, ye to itne mein he's selling so much, he would be making so much of margin.
Yeah.
People have not seen the other side of it. The fact that this is an industry with the highest mortality rate. 60% restaurants shut in year 1, 20% shut in year 2, right? So there are a lot of challenges intrinsically with the way the F&B has been running all these years. It's a century-old industry for that matter. But the businesses or whatever business were made all these while were the same old traditional manner of putting up a brick and mortar store and then going after a particular product with a brand, which is what we realized in 2014 that to scale up, the biggest interesting insight that we came across, and also as an outcome, was the fact that when we are trying to scale up, it takes its own sweet time to scale up your outlets, because in India the per capita real estate availability is the lowest, right? It would be about in the urban market about 100-150 square feet. If you look at China as a market, it's 4x. If you look at US as a market, it's 7x.
Wow.
So if you really want to make it big, the story bigger, and you want to scale up, you're bound to face that challenge that you wouldn't get the best real estate that you would want this new baby in the or new store to have, right? That is problem number one. Second problem was the fact that the rentals to revenue, the mortality bit that I was talking about, it's because the such a less real estate availability, the rental to revenues go to the level of 20%.
Where do you guys start then? Because you're
so we started with Mumbai. We started with Mumbai, Pune actually. Pune. Then when we started scaling up, Mumbai was our first market. We learned the hard way, and then
I was just wondering
one of the most difficult markets. And then we were scaling up in Gujarat, which is where in 2014 we came across this realization, right? And that is when our first light bulb moment happened in our journey. So our journey is, we kind of, the narrative is like that, this is a journey of 3 light bulb moments. And so the first one happened in 2014 when we looked at the actual data trends. 70% plus consumers were not even coming to our stores and ordering. They were ordering via online. As you rightly said, we are the world's first restaurant to have ordering via Twitter. Consumer will very conveniently simply say chicken tikka roll, #Faasos now, and we deliver it to their place.
Platforms weren't there then.
Platforms weren't there, very right. Yeah. But yet we had our own website, our own app in whatever shape and avatar. And we used to have good 70% happening only through delivery. Right. Secondly, we did a quick survey. Almost 67% customers had not even seen our store frontal, yet they were ordering from us because the brand had arrived. Right. So with these realization, we said when the customers are ordering for delivery, they need convenience. When they don't even get bothered that they want to visit and then order, then where we stuck with that age-old formula of doing the F&B in this manner only, which is where in 2014 in Ahmedabad there is a place called Bhopal, right? And I was trying to search for this location for almost 3 months. Wasn't able to circle down on one location. Finally, with this, we said, why not let's give it a try. And we took a location on the first floor of this corporate building, and we went live. I was able to sign the property in like 10 days.
That's the third city.
Yeah, sorry?
That's the third city.
That's the third city, yeah.
Pune, Ahmedabad.
So there was Bangalore happening parallelly, where we were doing the old, and then Ahmedabad, Gujarat, MP, all of these were scaling up. So here we did this pilot, and we saw the numbers happening from day one itself. So that was a big turning point in our existence. We said that, with Cloud Kitchen, what you are able to now do is that you are able to, number one, get out of this economic pressure of rental to revenue. That is solved. Secondly, also interestingly, you are able to completely mitigate your location risk. What I mean by that is that today, if you go and get a good real estate, high chances that there would be a flyover that will come in front of you. The traffic which was supposed to land in front of you will start flying over you, right? So you're able to de-risk yourself on that risk. Thirdly, you're also able to do something very interesting, which is that you are decoupling the brand and the real estate. Now I'll double down what I mean by that, because that will also give us the path to our next light bulb moment. The fact that today if you go to say a McDonald's store, even if I get the world's best biryani chef based there, you will still not believe McDonald's for a good biryani. You will say that this is the good burger brand, right? So that is the truth, that the brand and the real estate are very tightly coupled. But with this Cloud Kitchen, what we had done fundamentally challenged was this decoupling of the store was nowhere to be seen. You were simply opening, and then also the aggregators started coming in, and you would either through your website or app or any of these aggregators go out on your storefront, look at, okay, this brand, I want to have wraps, rolls, and let me order from Faasos. So with that realization in 20, so that is also something that also happens when you do a Cloud Kitchen.
Okay.
Right. Comes the year 2016 when when the second turning point or the second light bulb moment happened, where we realized that the opportunity in front of us with what we had built was not limited to being the largest wrap operator or a burger operator or a pizza operator. The canvas was actually a lot more wider now. So we have this, we have a lot of 2x2 in the company. That's what happens typically when you have 2x2s, the typical 2x2 metrics. Because when a consultant is the founder, then that automatically starts happening, right? Okay. Kudos to JD for that. So there is this holy grail 2x2 that we follow. On one axis you have single serves and group serves. On the other axis you have value and indulgence. Right. Now if you look at any industry, consumers belong to these quadrants. I'll just elaborate that with an example. Like if you are a Audi or a BMW or a Mercedes owner, you would be on the right top quadrant, right? The premium segment. Or you might be, unless God forbid something bad happens, you wouldn't downgrade to or go back to the Maruti kind of a quadrant, right? But in food, consumers move between all these 4 quadrants. What I mean by that is on a typical Monday, you would want to have a homely cooked meal, which is regular single serve, right? On a typical weekday, you would want to order for burgers for all your office or pizzas for all your office. So which is group ordering again in value segment. On a weekend, you might want to go and celebrate in a Michelin star or Hakkasan of the world, right? To say that let me indulge, right? And on some other day, you will go and stand on the chai ka tapri. Consumers move between all these use cases and missions. Right, so that was a very interesting realization that we had, and we said, where are we getting limited now? And now that we have decoupled the brand and the real estate, which I explained, we said, where are we limiting ourselves to just wraps? Why not go after more such use cases and missions from the consumer lens? Which is when in 2016 we gave birth to our multi-brand playbook, right? And we started with there were a lot of realizations, a lot of failures that we had. Like for example, the first thing we did was we launched pizzas. It was a no-brainer, a very high margin category. There was only one or two players, and we said, let's go after that. We launched pizza within Faasos. It bombed.
It bombed.
Yeah,
how can you go wrong in pizzas?
Yeah. So exactly. So the other realization inside that in food, consumers associate a brand with a food category.
So if they're going to order Domino's, that's it.
Right. I mean, and then we launched a brand called Ovenstory Pizza, which is where suddenly the pizza sales started happening because they would associate a pizza, operator with a pizza brand and all of that. So that gave birth to multi-brand.
This name thing is a thing, is it?
Name, brand persona, brand purpose, all of that is a thing, which is where we entered the world of brands. After Faasos, we launched Behrouz Biryani, positioned in the right topmost quadrant, indulgence and group serves kind of mission. And then after that, we kept on launching brand after brand for different missions, right? Yeah. So that was the second part of our journey. Comes in the year 2019, which is where happens the third lightbulb movement, which is where the entire journey also kind of further evolves from just being a multi-brand or somebody, as they say, the cloud kitchen play, right, to actually being a platform play.
Okay.
So what we realized in 2019 was that what we have built is, while obviously brands are the outcome of that, but what we had built were this operating system of sorts, which comprise of these three foundational pillars. Pillar number one, culinary expertise. The ability to come up with a great recipe and then de-skill it and then skill it up consistently across the country. Like today we do 10,000 kilos of fresh dum biryani throughout the country on a daily basis. Wow. That's the size. But then if we have, like another metric I'll tell you, we have about close to 8,000 employee strength, right? 8,000 employees with all the workforce that we have in kitchens. We have 400 cloud kitchens. Wow. Just guess what are the number of chefs do we have in our network?
250, 300?
Yeah, it's just 15 chefs. Yeah. So that is the culinary expertise that we have honed in our R&D center, right? So that's the pillar number one. They come up with a great recipe where, hands down, it beats most of the competition there, and then they keep innovating there. The second ability was the entire tech stack. As you rightly pointed out, right from the early days, we were very, we were a little better on the digital fluency part, and we built a lot of these because also this journey had not been done in any other part of the world, right? So we had to build a lot of tech elements to enable this, like right from connecting to on the distribution side to kitchens where now on your one station there are multiple brands landing and order. Like if there is a bakery, there is a pizza station, you will have a bakery order or a dessert order also coming in. You will have a pizza order also coming in. You will have a lasagna order also coming in. So how do you do all that from the tech standpoint? As many number of SKUs, like close to 400, 500 SKUs. So a lot of demand forecasting, a lot of inventory management, the backend, the entire tech stack with the vendor, the kitchen management software. So all of that was built in-house, which is the pillar number two. And then thirdly, the supply chain.
Okay.
Supply chain is pretty much like the virtual pipe. Like today on a Ganpati, we would launch a Modak Puran Poli across the country. During Holi, we launch Gujia Thandai, and we keep doing seasonal launch because there's this virtual pipe that connects the entire country for us, right? So these three pillars together build the Rebel operating system. We realized that in 2019 that Rebel operating system is not just as strong to build our own brands, but now we can also pick up these beautifully built brands in different parts of the world, different parts of the country. We call them global, national, local gems. Example there being Wendy's, right? We were trying to get into burger as a category, and we realized that again, we had this realization, which is that if the category is big, if there are already strong players there, building your own brand will be a difficult one, which Obviously. Is where we were looking out for a good brand
to acquire.
To acquire or franchise.
Okay.
This was a franchisee case. And Wendy's was trying to get into the country since good 4 years. They had a master franchisee, but they were going through the same challenges of the typical physical world of F&B. They were limited to about 4 locations. So we said, and they are the second largest burger brand in US. We said, okay, give us the cloud kitchen franchisee and we'll pilot it. We scaled them up to about 90 locations in a year's time, right? From about 4 to 90 in cloud.
Cloud, okay.
Which is where we realized that this is the power of our operating system. This is what the platform play is, right? And post that, we opened up the platform for more such brand. We launched a business model called Launcher, where today we partner with brands like, say, Daryaganj, MOD, or for Smooth Chocolates, and a lot of brands. We understand what are the need gaps. I mean, these are beautifully built brand over decades, but they are not available in these different locations. And so we partner with them, we bring them onto our platform, and we then help them scale using the 3 pillars.
Yeah.
So that was our third lightbulb moment, or third aspect in the journey. And post which, that is how we kind of, as I said right in the beginning, we evolved from trying to build the an Indian homegrown QSR story with Faasos to actually being the world's largest internet restaurant platform.
Amazing. World's largest internet restaurant platform. Small note, folks, QSR is quick service restaurants and SKU is stock keeping units. Talking of which, 400 to 500 stock keeping units.
Yeah.
Can you just give me that entire, that chart of brands and food alongside that? So I know of 3.
Yeah.
Faasos, Behrouz, and Ovenstory. I'm assuming that each of them, just walk us through that.
So we again going back to this 2x2, right? So there was another 2x2 also that comes into play now. When you talk about which all brands do we want to go after, so the first one is very clear, to go after missions. Like single serve, we only had Faasos. We launched another brand called Lunchbox. So that takes care of the insight was that on a typical weekday you want to have food which is which is good, self-sufficient in its form. Typically, if you order from a North Indian or any of these brands, you will get a big portion size. So we launched 3CP, 5CP kind of offering there. So that brand has been doing tremendously well. It's now almost a 150-200 crore plus brand, and it helps us launch a lot of these. Apart from the regular menu, we keep launching a lot of festive offerings in there. So that is one brand. Then there was another interesting in the same single serve mission. Another very interesting concept that evolved because of the lifestyle that people have today. They are they want to have food on the go in a very convenient manner. We launched a bowl brand, right, called the Good Bowl, where now you get a rice prep or say a pasta prep and things, along with it's a very single one pot meal as they call it, and very handy, very convenient, very quick on the go, very satiating kind of a meal. So that's another brand that we have. Apart from that, we have a dessert brand called Sweet Truth. We also, in the luxury premium space, we were having a gap missing, and we find great synergy or opportunity with Smooth. Right? We started partnering with them, and then we bought stakes in them. So that's there in that quadrant. Then there is Wendy's. Then there is we have recently launched a brand called the Honest Bowl, right? Because we believe that health and this calorific intake, right? How much of macronutrients, calories, proteins. So this is a brand catering to that as a need gap. So likewise, I think we have in overall, and then we also have other brands in UAE, which is Mandarin Oak in Chinese. We have a brand in health doing phenomenally well, which is called the 500 Calorie Project. Is the largest brand in health space in across all the platforms in UAE.
One number. सब मिला के कितने brands हैं?
सब मिला के हमारे अभी आज के डेट में about 12 plus brands.
12 plus brands. Yeah. And 400-500 SKUs.
And then 400-500 SKUs. Then you also have these partner brands. So which would be another 15-20 of those. So if I put all of them together, we will be having a bouquet of about 35-40 plus brands.
Amazing.
Right, which is where comes another interesting thing that we did on the distribution side. Right, post the pandemic, we realized that now that we have such beautiful content, why don't we? Because distribution, when you are building a brand, my firm belief is that the brand strength is directly proportional to the fragmentation of your distribution, right? The moment you are limited to few platforms, it becomes a little, you're not able to play it out completely. So which is where we launched our own platform called Eat Sure post-COVID. And where, we positioned it as a new category creator of sorts. We don't say that it's another food delivery app, but we say it's a food court on an app. Right. The insight being that, like today, if in a group of friends, both of us, we are sitting and wanting to place an order. You might wanting to place an order for Faasos. I might wanting to have a biryani. Somebody else might be wanting to have a pizza. You end up placing 3 different orders, reaching to at 3 different times. With this Eat Show food court, you get all of them delivered to in one go. You can order them in one go and get them delivered in one go. Very minimal delivery charges, packaging fees, because we are continuing the full stack. We can give a better experience out there. So that's the play. Also powered by a lot of this content we were able to activate.
Yeah, I want to understand the stuff that you pulled the plug on. You mentioned pizza. I want to know the learnings you've had with, you tried this experiment, didn't work, because I can make out that you guys have a lot of agility and flexibility in trying something, not working, just pulling the plug on that. Just walk us through some examples.
Very rightly said, and I think that is the strength that you get with Cloud Kitchen. As I was mentioning in the beginning, you don't have any location risk, right? If I've identified a catchment, say Bandra or Borivali, and say in Borivali tomorrow I end up launching a North Indian brand, to realize that the demographic of this customer, they are a lot more towards vegetarian eating, Gujarati, Jaini, all that demographic is high. So there is no location risk that I don't have to shut the store and go back the traditional old way, or there is no brand risk also. I can simply, as you rightly said, toggle off this brand and toggle on another brand. So that's been, and there were a lot of I mean, while I narrated this entire story, right, as if it was very beautifully well thought through, and everything was falling on its own way, but then we had a lot of tough time.
I want to know about
we
that.
killed a lot of and it's very difficult to do that when you are a parent, you are a founder, that you have to kill your initiative or you have to like call it off that it's not working. So there was a very interesting brand play that we launched in Mumbai in these 3 locations called Olive Trail. Right, it was a very premium gourmet kind of a position brand. We rather back then I remember Olive Trail, nowadays premium burgers and these categories are evolving a lot. Back then Olive Trail's burgers were the best rated burgers in Mumbai, right? And even for all of us at Rebel, I mean, we used to amongst the entire menu, we had high stickiness, high retention, everything was working beautifully well. The unit economics was amazing in terms of the average order value being 650 rupees. Typically the industry operates at 300, 350 rupees. So all the metrics were good, barring the fact that it was not scalable, right? So because we had deployed some heavy duty chefs and which, while, I mean, if the aspiration is to keep it limited to 1, 2, 3 locations, it's doable. But the moment you try to scale it up, I mean, the experience starts going for a toss. You would have seen it many times, right? I mean, and a lot of, I'm sure your viewers would have experienced it. They would say that, okay, brand X was amazing when it was there in this location, and now that they have scaled up, they are diluting their quality. They are doing this. Now the founder has, they are going after money, but that's not the truth, right? The truth is, I mean, the founder, why would a parent let the brand go down south? It's the unfortunate truth that when you scale up, if you have not solved for de-skilling, because every order is a moment of truth, right? In this kitchen, there is a chef A standing. In the other kitchen, if there is a chef B standing, the person, there are so many degrees of freedom. I mean, the person, what state of mind, what training levels, what amount of pressure of order volume, all of those nuances come into play, and which is where the things are not consistent. So that was one very interesting journey. We tried to make it happen with giving a lot of multiple attempts that we did, because the brand was beautiful, the product was amazing, consumer love was awesome, but it had no future. We had to call it off.
Okay, I want to talk about fundraising, because you guys have been around for more than 14 years now. You started with Sequoia, and along the way, so scaling is one thing where you get a nice reality check, which you just spoke about. So we've covered that. What about fundraising? I'm saying this because एक ज़माना हुआ करता था where 5 minutes you meet a VC in a lift and that's it, you're done. 100 crore ऐसा ही मतलब हो जाता था. Walk us through that entire journey so far.
Yeah, so in terms of investors, we are very fortunate to have got one of the world's best investors. I would say, as you said, Sequoia from the early days. Then we had Lightbox. We have the RTP Global. We have Temasek now coming in. We have QIA. So we have been fortunate that way. I think in terms of, my 2 cents, my personal opinion, they would be like from the outside world, you really fall for it. Oh, they have raised $100 million round, or they have raised XX crores. But actually, the other side of the story is that, so I mean, my take on fundraising is that one has to be very conscious and careful about when to do it. I think timing is of utmost importance there, right? If you do it before you got the right product, right PMF, because see, ultimately it's a hard-earned money for someone, right? Which these investors are helping you to plow into your business, and it's completely fair for them to expect a certain rate of return, which has to beat the market numbers, right? And for that to happen, you have to be at the right stage of your company where you know that now if I get this capital, I can double down and there will be no bars hold and we will just scale through to the sky, right? So I think timing is very important. Otherwise, it ends up putting wrong pressure on your business, on your brand, and ultimately the customer experience. So everything suffers. So that's been one big learning that, if I reflect back, I have that, we should, or for that matter, if I have to give it to as an insight to others, that, you should be very mindful about first getting spend 1, 2, 3, 4, as many years as it takes to get your product right, get your brand right, get the basic metrics right, whether it is about your brand love, brand rating, retentions, your LTVs, all those metrics, they have to be the industry best in that category. And then you take that leap that, okay, now let me get some funds and throttle my growth. That is where it will be a win-win for everyone, for your end consumer. If end consumer has a great experience on your brand, your investors will have better returns, you yourself will have a great journey built in. Yeah. So that's number one. Okay. Secondly, I think we have been also, in terms of learning, we have been very fortunate. I think choosing while you can't always choose the investor, but if you are fortunate to get the right investors, because a few of these investors like, GV, whom we all really look up to, or for that matter, Sandeep and Prashant and Galina, they have been, and now Vishesh. So there have been some tremendous investors you have got on board. There can be two types of investor, right? One who would be daily nagging you in terms of, ye kya chal raha hai, kaise chal raha hai, ye, all of that. Yeah. And the other one who would give you a good set of insights from the worldwide view that they have, because that is what their strength is. That, okay, and give you perspective and give you inputs in terms of, okay, these are also options to play out. Right, and then they will leave it to that, and then let the founder play it out to themselves. So I think that way we have been very lucky to get the investors of second types, and which has added to our journey in terms of how we have panned out all these years.
Cool. Okay. I want to now start talking about the business, right? Because I, for one, don't know how. First, I guess, what exactly is a cloud kitchen? How does it operate? How do the unit economics add up? And I think once we are done with that, if you could just help me understand how does that compare with a full-fledged restaurant?
Sure.
Okay, let's go there.
Yeah. So, and I'll keep Rebel out of the scope, because if I talk about the averages in terms of a cloud kitchen, the numbers will get muddled up because we are operating at a scale, right? Our economies of scales help us get better gross margins, better commission structure, all of that. So I will possibly compare a typical cloud kitchen versus a brick and mortar.
Industry in India today? How many cloud kitchens are there in your estimate? Like, are we talking hundreds, thousands, or much more?
Thousands and much more. Yeah.
So
it's huge. Yeah.
In the 14-15 years.
So I'll explain what cloud kitchen is. Okay. So basically, in the traditional avatar, as I was explaining earlier, to build a F&B or a brand, F&B brand, you had to go and find a great location, a brick and mortar location, do proper dining experience and do a kitchen there. So that the customers can come, experience your brand, and then also possibly go back and order for food. Yeah. Right? This is the traditional avatar. Typically, the capex that goes into building an outlet like that, if you're doing a good job of it in terms of ambience, experience, and all of that, would be about 1.5 crores. Right? Now comes the cloud kitchen world, where what you do is you don't have to first of all look at a high street real estate. Like, for example, if it's a Bandra, you don't need it to be on the Pal Hill Road, or you might still. In the heart of the catchment, there might be an industrial area, or there might be a industrial building. On the first floor, you can take a good 1,000 square feet, right? The capex goes to as low as about, say, 20 to 30 lakhs, right? So capex is almost, in terms of the real, in the traditional one, it's 5 times. It's like almost 1/5. Yeah. So that is number one. Secondly, the cloud kitchen now that you have this premise, you do up your kitchen in a beautiful manner, keeping all the quality and the hygiene, all the certification, everything in place. Yeah. So like we are today, we are one of the very few chains who are HACCP certified. There are a lot of standards that to operate a particular cloud kitchen. So one has to be very clear about that, right? So and ensure that those are met. So once you do that, then you can start going after activating a brand and or the product category that you want to get in. Yep. You play that out. As I said, there is no brand risk, there is no location risk. In Borivali, I start with the North Indian butter chicken and all of that. You realize it's not working, you kill it, you move to a Jani menu, right? Yeah. Or you move to a complete veg menu. So that's the agility that it brings to you. In terms of, and also, so that is one avatar. The other avatar of cloud kitchen that have also started happening today is post-pandemic. A lot of traditional brick and mortar brands in their kitchen have also now activated a cloud kitchen brand, right? Because they don't have to now go out and again open another premise. They're the biggest problem in the F&B industry is the fact that there are these M curves. On the weekend, Friday, Saturday, Sunday, during the dinner time, the volumes are really high.
Correct.
To ensure that the experiences are top notch there, you have to deploy a certain amount of manpower and all the utilities, everything. But the utilization of those people on a typical weekday is really bad, right? So those are the M curves that they go through. So typically on a Monday to Thursday, we all go and hit a restaurant saying that a happy hour chal raha hai. That is the unhappiest hour for the restaurant owner, right? When he's running that buy one get one, because he wants to increase the throughput of the utilization.
Obviously, yeah.
So now, smartly, what a lot of restaurants have, and which is where the numbers have gone on to 1,000 lakhs, whatever number, people have started utilizing the same premise to say that, okay, my place typically gets a lot of walk-ins for special occasion. On a weekday, let me activate a North Indian meal brand, right, which is good for office home goers. And you can very easily do that in your same premise itself. So now coming back to the unit economics bit, so the capex here would be about 20-30 lakhs versus about a crore and a half there. In terms of the overall, the P&L aspect of the cost lines, if you're a decently well-run business, right, you should do somewhere close to about 15 lakhs of revenue a month. Getting the product right, getting the PMF right, all of that. The gross margins are to the level of, I'm saying, discounts, food costs, everything put together. Also understanding that a single operator would not have as good a economy of scale as typically a large order, but still they would make somewhere close to 60% gross margin. Out of which, now if you're only a single brand owner, you would have to shell about 25% to the level of 20-25% in commissions, another 5% in marketing, so 30% goes there, so you're left with 30% contribution margin one. Post which you have the labor cost, which is to the tune of 8-10%. Then you have all the other costs. The rentals are much lesser than this world, which is used to operate at 15-20%. Here you operate at 5%. And then also the other utility costs, all of that. Net, if you subtract 30%, so all those costs, you are left with typically about 10-12% of your EBITDA, right? So even if you do 15 lakhs of sale, 10% EBITDA, 1.5 lakh a month, your paybacks are about 1.5 years to 2 years.
Yeah.
Go to the traditional world where 1.5 crores is what you invested, right? Even if I assume, and now the dynamics are a little different in terms of the cost line because your blend of revenue is changing to only online to online plus offline, where you don't have to pay commission, but you have higher electricity cost, higher utility, manpower cost, all of that. Net, even if I assume a 10%, 15% EBITDA there, at a sale also goes higher from 15 lakhs to say 50-60 lakh.
Obviously.
Still you end up making 5-6 lakhs of bottom line. That 5-6 lakh versus 1.5, the paybacks is about 2.5-3 years.
Yeah.
Right?
But
so
15 lakhs is a huge number, right? If I'm taking an average value per order of even 300 or 500 rupees, I'm looking at an insane amount of units, right? So my next question to you obviously is, here we are in Bandra, where I think if you throw a stone, you'll either hit a salon, gym or a cafe.
Yeah.
Okay? In our case, cafe. Right. It must be like, so how is that cloud kitchen going to compete? Because the minute you open a Zomato or a Swiggy or whatever, kilo ke bhav se hai. So where am I going to stand? Well, 15 lakhs to boss, I don't think I'm ever if I'm someone who's starting new, right? I'm just wondering how do I reach that number? You've done 15 years in the business. Yeah. Where do I start? How do I compete?
See, I think it goes down to this very basic hygiene factor, which is I've seen. I mean, you're saying 10-15 lakhs looks difficult, and I agree that it doesn't happen on day one, month one, but possibly month 5, month 6, month 7. But the key differentiator there between 15 lakhs and I know restaurants which are doing 30 lakhs from one cloud kitchen premise.
Wow.
Right, 30 lakhs, 40 lakhs, the numbers that typically a dine-in outlet does. And the big differentiator between them and also there are operators who are stuck at 4-5 lakhs. Yeah. Right, the big difference there is product. As simple as that. You get a kick-ass product, consistent product, which is always whenever a customer orders, and that is what the work is. I mean, it's not that cloud kitchen is solved for all your problems in life.
How do you build that? I'm saying that how do you differentiate one pasta from another? How do you differentiate? See, burger, I can understand. McDonald's saying about dal diya, pizza mein aapne dal diya. But I'm saying once you come down the order, sandwich, rolls, all of that, the differentiation factor when you've got Bandra at last count when I looked at Zomato has got more than 600 to 700 food outlets. Okay, so per kilometer it's... So I'm just trying to understand that. Obviously, smaller towns and cities will not have that kind of competition.
Right.
How do you build
that? This is a lot more scientific than how you arrive at the right product. And when I say right product, it's just not meaning a good tasting product, but also what happens after the food is consumed. I mean, how does the consumer feel after a few hours? What is the pricing at which they have got it? What is the entire product experience, the packaging part of it? Like just to give you an anecdote there, like today when we launch a product, there would be possibly 110 variants that we go through in terms of trying. The chef and team, that R&D center goes and tries, and we finally are able to circle down on say 4 or 5 versions, which again it's not circled down.
Walk through with this. I want to know more here. Yeah. Like when you wake up one fine day and decide कि चलो आज ये area में cloud kitchen.
So for example, I would talk about the Behrouz story, right? I mean, when we started Behrouz, again with a clear understanding. First of all, the purpose has to be clear, that what is it that I want to do with a brand. So we're very clear that we want to build a biryani brand. Biryani as a category is the largest category, massively fragmented, not even a single national player, right? So with that we said we want to target the right topmost quadrant, which is your group, serve and indulgence. We want to make the most royal biryani experience, right? So first it comes to the product. So they were like the making of Behrouz recipe. It took us almost about close to 8 to 9 months that the chef and team constantly kept on innovating, iterating. We did a lot of consumer trials, and biryani changes every 50 kilometers. So we had to come up with a recipe which possibly on day one would not appeal to everyone, but majority of people should kind of love it. So we did a lot of those trials. We came up with the product. We launched it in one market, and also when we launched it, keeping the brand core at the center, we said it's the royal biryani. The entire packaging experience, if you go back in 2016-17, when all the biryani used to be served in a panni, here comes a biryani which was served in a beautiful box with a beautiful brand story written on it as to how this recipe was 2000-year-old. There were wars that were fought over this, coming with a complimentary gulab jamun and raita, priced at almost like 150. We use a metric called RPI, which is a relative price index. If typically on average biryani sells at 100, we sold this for 150.
50% premium.
Yeah, because I mean you are putting the best ingredients in there, the best quality basmati, proper desi ghee, all the finest of like in our mutton biryani, which is one of the largest selling SKUs. We give boneless mutton, because the insight was that when you go about eating, while you love the bone part, but because that brings more flavor, but then it is also the most ingredient part, because a lot of times between two eaters, one will get piece, the other one will get just the bone, right? Okay. So I mean, understanding those insights and problems that exist in that very product category, and then finally nailing the product right, the entire product part of it, the experience, how it is going to be delivered, the entire like in our website, we don't call the chicken biryani a chicken biryani, we call it the Lazeez Bhuna Murg biryani, right? Or the mutton biryani we call as Dum Gosht biryani. When a customer comes and talks about on Twitter or Insta thanking us or appreciating us, we say shukran. I mean the brand narrative, the brand story part of it, the communication part of it. So when everything comes together, giving that one larger purpose of giving the most royal experience, I mean we went through that journey. It took us good amount of time, but once you get it, that is when you start scaling up.
Okay.
Then that is when we started doubling down on other markets, Bangalore and other markets. And again, then constantly the journey is not over. You keep on innovating. Like when we went south, we realized the other challenges, that the taste profile changed a lot. People expectation in terms of spiciness goes up. We launched another variant of, we have the same biryani, because you are a national brand. You can't have not the core product not being there. But we launched another biryani version called the Nizam-e Khas to cater to that profile of users. Right, so that's how it's a journey, but cool. Yeah.
So if I were to take your revenue pie, I don't know whether you guys have declared your numbers or not. Maybe you'll do an IPO soon, so we'll get an idea of that.
Yeah.
But out of your entire revenue pie, what are the biggest contributors? Like, is it like an 80-20 pattern where 80% of your revenues come from just 5 products, or is it more diversified?
No. First of all, there are no products; there are brands.
Sorry, brands.
Yeah, so
my bad.
And in terms of the Pareto, that simple, straightforward 20-80 rule does not apply.
Okay.
Right, because as I said, a lot of these brands are 300 crore, like Behrouz. A lot of people feel that Faasos, but Faasos today is still by volume the largest brand. Right, so it again is a 250-300 crore brand. Behrouz is there, Ovenstory is there. Lunchbox is scaled really big. Wendy's is now, even though it is there only in about 253, we are still scaling it up to across the country. That's another. So I think it's pretty well balanced between, at least I would say, 6-7 brands.
Very interesting.
Yeah.
So what becomes a revenue driver for you? Is it A, opening new cloud kitchens across the country? Is it B, launching new brands, or what?
No, that's a good question. So in terms of, if you look at the traditional, again, I will compare it with the traditional world of F&B. You have a brand, and there's a metric that we follow in the industry called SKSG, the same kitchen sale growth, right? So So there's this SKSG that happens that same kitchen kitna grow kar rahe hain, and then as you rightly said, the other lever is only to keep on expanding your footprint. But in our case, it becomes a lot more interesting because we are having multiple brand playbook, right? So there are three levers largely. First lever is innovating within the current brand portfolio. Like for example, within Faasos, we have launched shawarmas, right, which has now grown massively, about 12-13%. We have launched burger wraps, which again is a very high incidence launch. Burger wraps, it's a
Burger
people
wrap
look
kya
forward to
hota
this
hai?
unique concept.
What
You
is
have the burger patty and the burger flavors getting into wrap, right? And people love it because they don't want to possibly have the bun, but along with the wrap, right? So that is doing phenomenally well. So you keep doing a lot of innovations across the brand. So that's lever number one. Lever number two is going after more new opportunities. Like as I said, we have launched Honest Bowl as a brand. Wendy's is getting added. So in the same kitchen now, apart from the first lever of innovation happening in the same brand, you're also now adding another S-curve, right? So this new S-curve further adds to growth. And then the third lever is the inorganic expansion of adding more footprint. So all in all, if typically and a single brand restaurant operates at say 4-5%, the market listed entities also operate somewhere between negative for single digit to positive single digit kind of levels. In our case, the number goes to double digit or more than that, depending on where we are in terms of the because all these three growth levers plug in.
Operating margin or PAT
I'm talking about the SKSG, the growth, the same growth, sale growth.
Wow.
The growth,
Okay.
The overall sales growth, then typically that gets powered by all the three levers because of, as I said, number one, innovation, second is more S-curves in the same kitchen, and third is the inorganic expansion.
What's the secret sauce on cost? Because I'm guessing that a lot of stuff out here just becomes, repetitive, marginal costing kicks in. As you scale, you're using the same kitchen for giving more orders come in, you make more money. So where is the
you're very right. I think that's another advantage that we have been able to reap out of the entire this playbook. The fact that the biggest challenge in the industry is this M curve, as I told you, right? But we have been able to circumvent that because now on a typical weekday, my volumes of lunchbox Faasos, they go up because this again goes back to the same 2x2, right? The single serve is doing really well. On the weekend, the single serves kind of moderate down, but my group serves like the pizzas and the burgers and these brands start shooting up a lot more.
Okay.
So, and that is how the cost play come into play, apart from the economy of scale that any which ways happen with scale.
Okay. Last question before we go into the break. Any comments? You spoke about margins at the generic cloud kitchen concept as a level, but about you guys, are you guys profitable margins, anything?
Sir, I mean, while the numbers are there to look at, which are there in the public, but then largely the story is this, right? I mean, the revenues are constantly growing because of all the three levers. In terms of where we are in terms of the profitability journey, obviously, when you are building something like ours, and especially a platform play, you raise fund because you have to invest before time, right? I mean, I have to invest in my tech, in my product, a lot of those things that have not been done anywhere in the world. To do that, you make that investment, because of which, at an overall level, you might look bleeding. But over a period of time, because the fundamental level of the business metrics are in a very healthy shape, like the kitchen level EBITDA is there, right? So the moment the growth keeps happening, the EBITDA flows keeps on increasing, and the cost keeps on getting absorbed. For the reason which, like, possibly, I think if I remember correctly, 400 crore plus kind of burn that we used to do on annual basis has come down to about few hundred, about 100, and this year it will go even further towards the zilch levels. Yeah. So we are already kind of on that track.
One for our Instagram reels, okay?
Sure.
Favorite food brands?
Favorite food brands? For me, it is, I love Wendy's. In spite of being a non-vegetarian, one of the products that you must try, I would say, is the spicy aloo crunch burger.
Okay.
That is number one. Second is the dum gosht biryani of Behrouz. Hands down, I can't find a dum gosht or the mutton the way properly it is cooked, flavored, and everything is it's an amalgamation of all the right flavors and right ingredients that comes together. So these definitely are the two most recommended products I would give. And people who are up for trying something new, we have, as I said, burger wrap is a very interesting, doing really well, one of the highest rated products right now. So one must try that out.
When you were young, before you started all of this, what was your favorite food at that point of time? As a bachelor, as someone who used to look for grub in any kind, in any shape
and form? तो सर कुछ भी खाते थे यार, मतलब वहाँ तो हमारा खोखा होता था. In my college, I remember, I'm a misfired engineer, so हमारे REC में पीछे की साइड में खोखा होता था. वहाँ जाके मैगी से लेके जो मिल जाता था, दाल वगैरह, पकौड़े, fried, all of that. I mean, everything was there. But yeah, I mean, so I come from an army background, very well spoiled by my mother. She is a brilliant chef. So I used to love multi all these cuisines, right? The English food of the world, the Chinese food, all of that. I used to.
Which is what I was wondering. You spoke a lot about Behrouz Biryani, whereas here, sitting in Bombay, the most thing you can think of. I'm a vegetarian, by the way, so I'm kind of.
Oh, sorry, I must have offended you so many times during the entire conversation.
मेरे को क्या फर्क पड़ता है यार? खाना है, मैं कौन होता हूँ to tell somebody that he should be there. But I'm just thinking that when it comes to rice, the only thing you think of is fried rice. Biryani is like a totally different kind of a thing. So the fact that you build that brand throughout, and it's at a much higher price point also, I'm assuming.
Yeah, I mean, so we also now have we have the Behrouz Biryani out there, and then we also have a brand called Thalaiva, right?
Achha,
It's a Thalaiva Biryani, which is more in the aggressive pricing, the more value segment, right? Because again, as I said, we need to cover all the spaces, right? So and here also the flavor profile is a lot more, as the name says, is more towards the South Indian biryani.
All India, where is biryani sold the most for you?
Biryani is, I mean, for us, South is there. But if I put all the brands together, now it will also vary brand to brand, right?
Sure.
Like the southern brand, it adds a lot more number there. But largely all these cities like Mumbai, NCR, and more importantly, very interesting other data point that I would want to surface, right? I mean, with the social media and the way the boundaries are getting blurred, we are seeing a massive traction happening in tier 2, tier 3 markets. Like, you'd be surprised to know that amongst my top highest revenue 5 outlets, right, Varanasi happens to be one of those outlet locations because people have aspirations. Just that the supply has not reached there. So the moment we activate today a Behrouz in, say, a Varanasi or a Nashik or an Ambala kind of a location, we see some great numbers. I mean, numbers as good as a location out there in Bangalore or Mumbai or NCR.
Very interesting. Folks, we're going to take a small break on that point. When we come back, we're going to go deeper into the cloud kitchen business, food, and much more. Don't go anywhere. We will be right back.
Did you know Indians report nearly 800 cases of online financial fraud every day, which has resulted in losses exceeding 1,000 crores in the last 5 years? To keep you safe from such fraud, I am starting my newest podcast series, Conversation with Vigilante, an initiative by HDFC Bank. In every episode, I will feature special guests who can share expert insights on the different types of fraud, their modus operandi, and how you can protect your money. Stay safe, stay vigilant, and don't forget to tune into Conversation with Vigilante. Catch the episodes on all audio streaming platforms and V for Vigilante YouTube channel.
And welcome back. Okay, Sagar, just a few points here and there before we wrap up. Delivery aggregators, you guys have been around for long enough to know what life was like before the Zomatos and Swiggis came, and now after, and now that they're well established. Just tell me, how important are these people to the F&B business as a whole, and of course to your business?
Right. No, I think they're very integral part of this entire food delivery ecosystem, food business, food delivery, the way at which the food delivery segment, specifically in the entire F&B business, has panned out and the way it is growing. They obviously become a very, very integral part of it. For us also, they have been very strategic. I mean, it's been both ways, right? Because when you look at these platforms, they also need partners who could get to you some great content, great selection, and good brand, good offerings which are missing out in the market. So we have jointly built a lot of these brands together, is how I would look at it. Like, for example, I remember when this, obviously Faasos, Behrouz, all these happened, but then there was a time when, the insight was that the single serve is a very big need gap out there in the market. So I remember, we built this lunchbox brand jointly along with Swiggy to make that bridge in that gap. Likewise with Zomato, we built another brand, the Good Bowl, because this new concept of single pot meals was growing a lot. So I think it's playing to each other's strength. Their strength happens to be logistics, picking up a product from point A, delivering to point B, whether it is food, whether it is groceries, whether it is whatever categories that we see today, them getting in, right? That's their core strength. And our core strength happens to be food. So between the two worlds, I think there is has to be complete synergy for both of them to have a win-win existence.
At no point did you maybe just wake up one fine day and say कि यार मैं इनको 25-30% दे रहा हूँ मेरे revenue का. Why don't I build my own logistics?
So definitely, see, there are, and when we were just few brands, right? I mean, we all, from the day one, we have always had the delivery fleet with us, because as I was telling you, we were the first one to do ordering by Twitter. Our 70% of the business used to happen any which way through delivery. So we always had that on fleet.
I mean, that's how the F&B used to operate at one point in time before these guys came in. They kitchen staff को ही बोल देते यार cycle bike पे चला
call पे phone पे आते थे orders mostly. Website भी नहीं थी तब तो. So yeah, since those days we have been always, because it does help you in few other ways. Like for example, the moment you have access to these consumers, you are able to get a lot more insights from them, right? And which is where, at least in our journey, we have over the last 4 years, in a very diligent manner, we have also built our own channel, which is Eat Show, right? With that, and we have tried to build this. Another very interesting thing is, I don't know if you have come across this, that I mean, while the world says that okay, you move from offline to online, we are actually now getting back to offline in an omni-channel way. So what we are doing is, with this Eat Show concept, which I explained earlier, positioning it as the smart food court, where you get to order from all these multiple restaurants in one single order. You get the assurance. Why it is Eat Show? Because you get the assurance that all the food being served to you is coming from HACCP certified kitchens.
Okay.
You can actually look at the macronutrients on because we control the full stack, we can do these things, right? And the entire experience layer, post-order experience layer, all of that is built with us. And now what we are also doing is, we are opening these smart food courts on a high street. Why so? Because I mean, today if you look at a group of us, right? If we want to go out and eat food, different taste buds have different cravings. So somebody compromises. You go to say a sub brand or a burger brand or a pizza brand, right? But somebody else along in the group will be compromising and having that dish. But in our we realize that we can actually solve for that with this smart food court. Now we have put about close to 12 of them. What we are doing is, on the high street, we started with Pune, on a high street on Law College Road, for example. We put in this in front of the cloud kitchen that we already have, we put in the dine-in.
Okay.
We deployed digital kiosk where consumers can walk in without any human interaction. You can have either place an order from the app or the kiosk and get a donut along with a wrap, along with a biryani, along with a pizza getting delivered to you on your table in a very digital way. You then go back and also, because you have now downloaded the app, you also become part of the overall the ecosystem. So that's how we are building the distribution, because it does bring in a lot of power or access to consumers to understand. Like today, the Eat Show app is about 10 million plus app downloads. We have a few million MAUs, and we get huge amount of data, like lakhs of searches that come onto our platform. I mean, almost like 30-40% consumers coming in and searching for a dish. You know exactly by what location, what is it that consumers are craving. For the matter, shawarma was an outcome of that. In Seoul, we had some lot of search hits happening on shawarma, and we launched. So, I mean, it helps you to power a lot more, if you have the own distribution play.
Consistency in food quality across God alone knows how many kitchens. How, is that, I mean, reaching that stage, was it a challenge? How did you guys build that?
So, again, it started from the first step of when you finalize the product. Finalize the dish in terms of ensuring that it's a great recipe, but it's also a de-skilled recipe, and it's very scalable. So when you come up with a recipe, there are largely these three elements of making a good dish. What ingredients, right? Second is the dispensing part of it, as to when are you dispensing it, at what point in time are you dispensing it.
Okay.
And third is heat and movement, right? It's a good dish coming out of food in a very scientific manner. Right, is a combination of these three elements. So the CIC, which I was talking about, the Culinary Innovation Center, the chef and team, they do a lot of work on that to simplify each and every element. Right, like tomorrow, if you go into my kitchen, I can train you to make a Behrouz Biryani in about an hour time.
Wow.
Right, and you will be ready to make the next batch of dum biryani properly the way it is supposed to be in the evening batch.
Okay.
Because we have proper SOPs around all these three elements, what ingredient has to go in, at what point in time it has to be dispensed when, and what is the heating and all that. Also, a lot of innovation and tech intervention has gone into the third element, which is the movement part, the heating part. Right, a lot of it has been tech has been used to do that.
Yeah.
So that's the secret formula, the CIC bit, which helps you to ensure that, because you're right that a brand is a brand only if it is consistent and scaled. Right, if you are not consistent, not scaled, you're there in few locations and very inconsistent manner, you're not a brand.
Yeah. How important is the supply chain, right? Because I'm wondering that if you have so many cloud kitchens everywhere across the country, you've got a lot of food as in raw material coming in that gets quickly processed, because I'm assuming that turnaround is what is most important at the cloud kitchen. So any hurdle that you guys face or anything on the supply chain, what's made it like, what is the secret sauce there, for example?
So basically, again, it's also the third pillar of our operating system, and it kept on getting honed over a period of time. Obviously, when it was just one brand, it was a lot more simple. But then with time, we had to do a lot of intervention on the tech side of things, wherein, the demand forecasting, the entire vendor management, the partner management. We also work with one of the best partners out there in terms of the facilities that they are being managed. the way we track the entire supply, there are a lot of quality audits that keep happening on a daily basis, right? Also, the fact that we are able to monitor the temperature in which the supply is happening, and today, if at all there is any, God forbid, any incident that is being reported, we are able to go back to the batch level and understand, okay, this is what happened or what happened, right?
Yeah.
So it's a lot more nuanced and technical now, but then we have evolved over a period of time. We had to evolve if we were to manage so many brands.
Yeah. 2 questions on strategy. The first is that how do you decide कि okay, this area, we'll enter this area with a cloud kitchen, or this is a brand we want to acquire or build? Like, if I were to say going forward from here, let's look at it that way.
Yeah.
What would you want to do?
Again, the same 2x2, very easy. I mean, in terms of one axis, you have the size of the price, which is the TAM, right? On the other axis, you have the level of fragmentation. We will, like the case of biryani, we picked up a category which was very big in size, also a lot more fragmented. You did not see a national brand. You have to build your own brand.
No.
Now, there's a category like, say, burger, which is also good, big, but there are already, it's a multiplayer market where you have seasoned operators. To build my own brand will take its own sweet time. So can I get and that is when we explore all these opportunities, right? Whether there is a master franchisee we can get in, because there are international brands who want to come and serve in India.
Yeah.
Whether can we do that, or for that matter, can we, acquire a brand or partner in a brand? So that's how we go about it.
Okay. You've been mentioning TAM a lot, and folks, that means target addressable market. And I don't get many people here in my normal podcast to whom I can ask this question, because it's a question that I have always wanted to know. Okay. And you would have had X number when you started this business, and you might have an X number now, which is different. What is India's TAM? What is India's target addressable market? मतलब entire businesses Excel sheet पे आप एक number डालो तो बहुत अच्छा दिखता है.
Right.
But when you go to do the business in reality, then you get a different check. So can you just
see, now
just
with the AI of the world coming in, things have become a lot more scientific. You can go a lot more accurate with that. You can actually and there are multiple metrics to arrive at in terms of this metric, right? I mean, so one is the futuristic TAM, which is where to say that if a category is growing at say a 10% CAGR, this is where it will land. But when you are starting your business, you don't want to only peg it at the future, but you want to also see what is the opportunity in hand, right? So which is where you get a lot of insights from all these platform aggregators, Google searches, trends, the GPTs of the world. So today you have and you have to be very specific in terms of understanding, what catchment are you looking at, what category are you looking at, because there can be, as you rightly said, there could be a lot of noise there, right? I mean, the TAM of biryani could be, I don't know how many billion if you look at the entire country versus the catchment that you're looking at versus the demography of customers that you're looking at. So you can go a lot more granular with the amount of data that is existing today.
But as a business, overall, top down, if I were to take one number, like we know India's population is 150 crores, 147 crores, whatever the number is. You've got number of PAN, number of Aadhaar, number of this, number of that. We know we've got about, 28 or 30 crore households, as in families or whatever you want to call them. But as far as you're concerned, if there was just one number that you would want to look at, what would that number be? I know I'm trying to get this down to a very simplistic thing, but just
see, roti, kapda and makan, right? So roti to दिन में लोग 3 बार खाते हैं, and 365 days they keep having, and it is only growing with also snacks coming in, like possibly, and then people replacing, because the lifestyle is also going to change. A lot of youth coming in where they don't have time to cook, but it's also about plugging in those gaps with the right offering. Like, nobody will be okay to keep having that butter chicken heavily loaded, on every meal. Can you get the right product, like we have done in the Honest Bowl, where it's a very balanced diet where you feel right, like you have had almost like next to home cooked meal.
Okay.
So I think the opportunity landscape is really big if you just multiply with the the population that you're catering in different markets where you are, along with that multiple of 3 into 365. It's a huge opportunity.
Okay. Then the strategy on marketing, because you guys have done some seriously good stuff, and interestingly for Behrouz, you also chose print.
Yeah.
So how do you what's your strategy on that?
So this has also evolved overall, Anupam, over the years. When we started, I remember the first campaign we did, where we said, when we launched the Royal Biryani, we called it the biryani that's worth a war is worth a try, right? And we had Raza Murad coming in, his beautiful voiceover, not the baritone voiceover, along with this entire visual. It panned out really well, and we were the first one in the country or maybe the world to do a biryani hoarding, right? I mean, So I think the choice of media, I mean, first of all, again, I mean, I'll go to the basics to say that get your product right, brand right. When you know that you are at the right time in terms of the journey of the brand, that is when you start spending marketing dollars, because now you know all my other metrics are taken care. Now I just need to acquire more users at a faster pace, right? You could choose to say that, okay, let the word of mouth marketing happen and then grow at the normal pace, or I want to throttle that. So when you want to throttle that, the objective has to be very clear, right? Like, for example, you know that, and there are some basic research data points that you can pull out, right? To say that, okay, out of X quantum of sample size, how many consumers know about my brand? Okay. There are these basic industry metrics of Thomas, Pont, all of that come in, right? And then you say, okay, I want to move my metric of this from this to this in this market. How do I do that? What is the media available that is there? Back then, I remember print used to be a very, with the kind of target audiences that we had, was a very relevant medium that back then. Off late, we have stopped. And I'm not saying that you should not do it. You should look at your brand. But then off late, we have moved to the digital world a lot more. Back then, when we started the first campaign, we did print. We did a proper burst of, about a month kind of hoardings that we picked. Outdoor media that we picked. We did radio for that matter. Yeah. And then we also gave it enough coverage and fire through the entire digital ecosystem of YouTube and all. But now the choices have changed. Other thing that is also now coming in very handy, and we keep on doing a lot of research with our new consumers to understand where they come to know about our brand, is social media.
Obviously,
right? So on social media, we are now spending a lot of effort to build in our content play, and where users come across the brand if you are serving the right form of content, and then that is how you get into their consideration and stay top of the mind, and then the order starts happening.
Okay. Last few questions, Sagar. One decision you could change if you could go back in time?
A lot of them. Obviously,
okay, there are a lot of top 3 maybe.
No, so I think, one very interesting learning I have drawn out of this entire journey is that I've really understood the difference between hard work and smart work, right? So what I mean by that is, I remember when we were trying to scale up our business, right, to be the Indian largest and all of that, we faced this hurdle that we're not able to grow at the required pace. We're putting a lot of hard work. I remember when I went to Ahmedabad, 3 months it took me to sign my first property in Bodakdev, right? And what I did for making that happen, a lot of hard work. I used to, like, literally the brokers used to call me and say, Sagar, भैया बताना जरा ये वाली road पे कोई property है, because I mapped each and every location, saying that this location is with this brand, it is going to get over, the contract is going to get over by then, and I had put the entire science behind it. I kind of became a real estate agent to a lot of brokers to say that कि इनसे पूछ लेते हैं, इनको पता होगा. Right, so that was a lot of hard work, which you could actually circumvent by looking at the actual. I mean, the job of a business leader has to be to remove the frictional forces. Now, this was a big frictional force for us to scale up from where we were to where we envisioned to, which is what we did. After a lot of realizations, and it took us good amount of time, like 2-3 years, to finally move the cloud, pioneer this or start pilot this cloud kitchen. So that was one. Second, again, I remember when back then. Another example I would say to the same learning, I remember Faasos used to grow at a healthy 20, 25, 30%, but when you have raised fund, your aspirations are like 100% revenue growth, right, on a year-on-year basis. We are trying to push a lot of things, like for example, a lot of hard work, again, फ्लैट्स इंसर्ट हो रहे हैं, जाके कूपन्स बांट रहे हैं कस्टमर को, स्टूडेंट को ये दे रहे हैं, वो दे रहे हैं, डिडंट इंक्रीमेंटल मूवमेंट होता था. द मोमेंट वी लुक्ड एट द अपॉर्चुनिटी दैट वी वाज इन अ वे विद अ फ्रेश आइज, वी सेड ओके, देयर आर मदर मिशंस दैट कंज्यूमर नीड, वेयर वी गोइंग आफ्टर जस्ट ट्राइंग टू पुश Faasos beyond a point which is already growing at a healthy pace. We launched a lot of these brands, numbers started happening. Okay. Right. So the point being that that is the understanding I kind of drew back from this entire experience, and in line with that, a lot of things that I would want to change, as I said, difference between thinking about what are those frictional forces, solving for them instead of just going and putting sort of a raw hard force which will not work.
Yeah. So if you're someone out there who's looking for advice, if you're an entrepreneur or startup founder, Sagar's already given you a couple of things indirectly. Now let me ask him that directly. Okay. Most valuable piece of advice for aspiring food tech entrepreneurs?
So yeah, while I think I touched upon a lot of them, right? I mean, I'm a firm believer. I know it's a very cliche thought, but I've seen that happening firsthand. If you don't get your product right, you try to move faster than, without understanding or looking at these metrics or acceptance of consumer, the product market fit, as they say, one is bound to fail. You can keep pivoting when the train is moving, changing the engine, changing the tire, but that's not healthy for your business and your brand for that matter. Consumers will try your product, they will not even come back for I don't know how many years. So that being one. The other one I think is which I think I have not touched upon is and which is again a very difficult one to do. I myself have faced a lot of challenges to be able to do that, is being intellectually honest.
Wow.
Right. So I believe what it means is that when you're starting something, you get so glued onto the idea, you get so married to it, it literally becomes your your way of life, and it becomes so difficult to take a step back and say that ये काम नहीं कर रहा है. The olive trade example I told you, right? या तो हमने 3-4 साल लगा दिए उसमें, मतलब कि नहीं चलो ये करके देखते हैं, but then after 3 years you realized boss ये नहीं हो रहा है, let's give it up, right? So to be intellectually honest on all the aspects, whether to say that okay, has the product arrived, has the brand arrived, are consumers actually loving it, or am I just trying to push it too much, because then that will not fly. Okay. And take the hard call if it comes to that.
Very interesting. Okay, cool. I'm going to slip in one more thing out here, because I get this a lot from you know how the HNIs and wealthy people have kind of grown in India these last 4-5 years. There are a lot of franchise fairs, okay, where a lot of brands invite people with capital to say ki bhai franchise kholo. I think Franchise India is one of the biggest brands, such as out there. Cloud kitchen is one of the most popular categories out there. Yeah. Okay, so if you were to give an advice, I don't know whether
we just started.
Okay, so folks, there you go. If you were to pitch this, if there was an HNI or someone sitting with a pot of money wanting to invest in a cloud kitchen business, but he doesn't want to get into the daily magajmari of this. I think his job, I don't know how that works, first of all. I mean, what would be his level of involvement? Land uska, paisa uska, what are the kind of returns? How would you pitch that opportunity to someone for making cloud kitchens as something to invest?
See, we have a lot of takers. We had been having a lot of takers all these 13 years or more than a decade. Finally, about a year back, we started with this because now finally, first of all, I mean, before I give out my franchisee to anyone, I should be really sure that this is making money.
Yeah, that's what.
Also, I should be very sure that, okay, I've arrived at the blueprint now. This is the playbook. Now, last decade, people used to come and say, Behrouz de do, Faasos de do. I used to be like, kaise dete hain? Matlab, hum log, we are also still figuring out what next, right? In my cloud kitchen, what other station I need to add? How does the tech work? How does the supply chain work? How does the integration work? A lot of things were already getting figured out. Now, finally, we believe that we have reached that mark, and which is where we have finally started giving out the franchisee. For obviously more details, people can reach out to we have handle and website link there. In terms of how would I pitch, I think the objective of someone has to be very clear. I mean, as a franchisee owner, you have this pot of money, and it's not less, right? Yeah. Whatever money, like whether it is a 20-30 lakhs of investment, if it is an offline model, it's about 1 crore of investment. That's a hard-earned money. So in terms of involvement, I mean, we definitely look out for the ones who are really having full skin in the game. I don't want to give it out because my brands are also at risk. While from our end, we have done enough to give it that cover and checks so that, we don't go wrong, right? Yeah. I mean, and we give that air cover for whatever franchisee we have gone. We have already gone live with few franchisees, and touch wood, they're doing really well. We have got some really good partners there. But then still the checks have to be on so that the brand should not take that's at the core of the existence. And then secondly, for the franchisee owner, he or she has to be invested, because if they harden money, they have to ensure that the returns that they are getting are beating the market rates, right?
That's what.
मतलब वो mutual fund में डाल के 12-15% तो आ ही जाता है, right? How do you beat that is what they have to ensure. For which again it goes back to simple basics, which is कि brand अच्छा है, but you have to ensure that every order is still a moment of truth. It's not like a chips company or a soap company that soap बन के आ रहा है बस बेचना है. You have to make that biryani so you have to be involved. We have plethora of metrics to run our operations, right? I mean, by time of the day, the roster management, ratings on different platforms. Within that also, what is the prep time? What is the load time? What is the wait time? What is the temperature? We have SWOT table, size, weight, appearance, temperature. There's a lot of standardization that we have done, which the owner will have to ensure that it is delivered, because we believe if you deliver on those basic inputs, the output will happen. That's how we look at it.
Okay, last question. What lies ahead? Or look at it in a different way. What defines success for Rebel Foods beyond the metrics and the profits and the sales and the margins?
See, again, it goes back to our mission, which has also got evolved, as I was mentioning, being the Indian largest homegrown QSR, to know what our mission is, to say that we want to keep building the world's largest internet restaurant platform, which brings to you the most loved category leading brands in every neighborhood in the world, right? So that's our Uber mission. And otherwise, people kind of get bogged down कि तुम बहुत कुछ कर रहे हो, but everything ties up to this, right? It also is the guiding force for us to prioritize things between in terms of what to do, what not to do. So that is the Uber mission, and beyond the numbers. I would say what we have truly done, and we are really proud about this, is that when you look at the entire landscape of the way all the sectors have evolved, right? If, for example, if you look at how media was getting consumed about, say, 30, 40 years back, there was the Blockbusters of the world who were the largest. They got disrupted by the OTTs of the world. You look at transportation, how Uber disrupted the entire, this age-old play of taxis and all of that, right? Or you look at how the retail brick and mortar business got disrupted by the Amazons of the world. But when you look at, and obviously all these things got disrupted in different parts of the world, and they got Me Too in India too, where we have been, the Indian entrepreneurs were able to also accomplish that. But when you look at F&B, a century-old industry till date, the largest operator being McDonald's with 40,000 restaurants, was always been run in the same old manner. What we believe with this new playbook that we have kind of pioneered, we have created a new category, and we are proud to say that, we are not XYZ of, say, an Uber in India or XYZ play in India, but we are the rebels of world. Today, our investors get pitch decks saying that, okay, we are doing something which Rebel has done in India, right? We are the largest operator there, touchwood, and so we are very fortunate that way, and we believe that is what we have accomplished, and we need to continuously keep on doing that, be ahead on the curve with that mission statement, keep on solving for opportunity after opportunity.
Sure, fantastic. And on that note, that is a wrap.
That's a wrap, yeah.
Faasos, that is a wrap on this episode. Thank you so much, Sagar Kochhar, co-founder of Rebel Foods. And folks, thank you for watching. As always, please like, share and subscribe.